Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting however with the volume profile of this range. You can see that price bounced on the value area low of this range and also passed the point of control. Next area of interest from a range trading perspective therefore is the value area high sitting at about 72.7k, which is one of the confluences in this blue resistance box here sitting between 72.5k and 73.6k. This also means, however, that losing the point of control here, sitting at 67.2k, increases probabilities for price to move to the downside and take these lows. On the chart, you also see two support resistance areas, the white boxes here. The first one is being tested at the moment, 68k to 68.4k, and the second one is between 71.4k and 71.8k. If you look at the first scenario, then here we're looking for a flat structure in this range. A three-wave move to the downside in wave A, a three-wave move to the upside in B, and then a five-wave impulsive structure to the downside in a wave C, where we preferably want to see this wave C move below the low of this wave A. Common target area for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of this wave A, sitting between 78.8k and 76.9k. Now in this scenario as mentioned, we are looking for a three-wave structure in a wave B, labeled here as a wave W, X, Y, double zigzag. Most common pattern in a wave B is a zigzag family structure, so either a 5-3-5 ABC, a WXY double zigzag, or potentially even a triple zigzag, WXYXZ, but a triple zigzag generally is very, very rare. Now in this scenario, in this wave X, we're then also looking for a zigzag to the downside labeled as a wave A, B, and a wave C. And what is important now is that price hit the 0.618 that you see on my chart. This 0.618 is taken from the high that we have over here to this low, and the reason this is important is because it invalidates another move to the downside in a wave 5 in this wave C. So in a more bearish scenario that we had a potential 1, 2, 3, 4, and then a wave 5, where wave 4 is not allowed to hit the 0.618 as that is an invalidation for a wave 4, and then we want to see a wave 5 to the downside. Now that price hit the 0.618, it gives extra confirmation that this is the low of this wave C here, in discount being then a wave A, wave B, and then a finished 5-wave structure to the downside in a wave C, and we're looking for a new structure to the upside. So in other words, hitting this 0.618 increases the probabilities for price to move to the upside. Now inside wave Y of this wave B, right, zooming out again for a little bit, we have this A, B, C, and we're looking for this WXY inside wave B. Inside wave Y, we are looking for a zigzag, as we're looking for a double zigzag in a WXY double zigzag structure, ABC in W, corrective structure in a wave X, and then another ABC to the upside in blue over here inside wave Y. Now another important detail is that this wave X did not touch the 0.7 Fibonacci taken from the low to the high of W, which is nice to see because the 0.7 would significantly reduce the probabilities for a double zigzag. As mentioned, we want to look for a wave A, B, and a wave C, currently then working on this wave A. You see the 1.618 on my chart taken from the low to the high of 1 to the low of this wave 2, which usually is a minimum target for wave 3, which is a target that we have hit right now. So we do have to think about potential wave 3s, but a wave 3 can extend to much higher. So we generally have to wait for a wave 4 to come, which means we have to wait for a bigger range, quite similar in length compared to this wave 2, before then another move towards the upside in 5 and therefore finishing a wave A. Resistance areas to the upside are over here the daily naked point of control together with the range point of control sitting at 69.8k, and then we have this target box over here mentioned earlier, 72.5k, 73.6k. After wave A, we're looking for a 3-wave corrective structure in a wave B, after which we want to see another impulsive move to the upside in a wave C to finish Y, to finish the green wave B, and then look for an impulse to the downside in that bigger wave C to then finish a bigger flat structure. A side note in this scenario is that this wave 2 is actually very long. If you take a fib time from the low here to the high of this wave 1 and you double click, you are comparing wave 1 with wave 2 in time, and this wave 2 finished just before the 6 fib time, which is a rare target for a wave 2, but it is not impossible, of course, for a wave 2 to have this length. Now, if we go to more bearish scenarios where we do not expect price to take this triple top, but instead move towards the downside, we are looking at mainly the lower two scenarios that I wrote down over here. In previous videos, as well as the live stream, we've spoken about this move to the downside being an impulse diagonal or double 1-2, and all three of those have a low probability here. Probabilities are higher. This is a corrective structure and not an impulsive structure. Therefore, we are looking for price to eventually, sooner or later, take this high over here. However, if we do look at bearish scenarios more locally, where price takes this low first before taking the triple top, there is two scenarios we have to keep in mind. As of recording this video, we are hitting some invalidations, so that is quite interesting, but I will explain them nonetheless for the sake of education. The first one would be an impulse to the downside, and then potentially a double zigzag WXY, wave W, wave X, and then a wave Y to the downside, where we're looking for a wave 1, 2, 3, 4, and then a wave 5 to the downside in a wave A, then a 3-wave B, and a 5-wave C to finish wave Y over here. Now, as explained in previous videos, this wave X over here did hit the 0.7 Fibonacci taken from the high to the low, which significantly reduces the probabilities for a WXY scenario. An invalidation for this scenario is this low, which has now been touched. As you can see, I call it invalidation of an impulse, because in an impulse to the downside, 1, 2, 3, 4, 5, you don't want to see overlap between a wave 1 and a wave 4, which has now happened over here. So therefore, this double zigzag scenario is invalidated. And secondly, we could have a different ABC, where this move to the downside here is wave A, but instead of having wave B here, as shown earlier, wave B is moving to the left, and then wave A, B, and then a wave C to the downside, where wave C is a wave 1, 2, 3, 4, and eventually a wave 5. What does lower the probabilities for this scenario is that your wave C is going to be extremely long in time compared to your very short wave A over here. And also in this wave C, we are counting a 1, 2, 3, 4, 5, where wave 2 hit the 886 taken from this high to this low with the pivot that we have over here. And an 886 is rare for a wave 2 and common for a wave B or a wave X. So if I take a fib from the high here to the low and I toggle on the 886, then you can actually see that price here hit the 886, lowering the probabilities for this to be a wave 1, 2, and eventually an impulse continuation to the downside. The real invalidation over here as well is the line at 69k, as that would mean overlap between wave 1 and wave 4. That's not what we like to see. And also, if you take a fib from the high of that potential 2 to the low over here and you toggle on the 618, then the 618 now has been touched with this move towards the upside, and the 618, as I like to say, invalidates a wave 4, as it is such an extremely rare target that other scenarios get much higher probabilities, and it pretty much invalidates a wave 4 in a 1, 2, 3, 4, 5. Therefore, it increases the probabilities for price to move towards the upside. Instead of an ABC, the probabilities are higher now for wave 1, 2, and then eventually a 3, 4, and a wave 5. In these bearish scenarios, we were looking then for an ABC, at least want to mention this, where wave B can be longer than a wave 2, at least more commonly. So a 6 fib time for B is not something that is really awkward. And then for wave C, the 1.618 is a target, but passing the 1.618 increases probabilities for a wave 3 compared to a wave C. And again, the first invalidation has been hit and the second one almost, but the 618 has already been touched. If we then go to the CVD divergences, then we do have bullish CVD divergences here that have already played out as price took this high very nicely indeed. And we have the bigger bullish CVD divergences, as you can see over here. But I do like to prefer 15-minute, 5-minute CVD divergences. Nonetheless, the target for this bullish CVD divergence here is the triple top. So that is definitely an area of interest in combination with a bit of resistance over here. And the bullish CVD divergence that we have over here has the target being this high. The moment this high is taken, the big bullish CVD divergence that we have over here also played out. So if we then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are highest to continue a range. We are looking here then for a flat structure in an A, B, and a wave C. And on the number 2 spot, I at least write down triangles, but for me, it is still too early to actually talk about triangles. I do realize we have a potential A, B, C, D, and then a wave E running triangle. However, the price action would be the same, meaning a move towards the upside. So we can then at a later stage see if this was a running triangle. I'm not yet a fan of a running triangle because wave A is so short, and also potentially a flat looks better than a zigzag here. And secondly, we have the triangle where this is the high and then A, B, C, D, E, and the invalidation is price moving above these highs. But nonetheless, it's a bit early for me to talk about triangles. I would like more information, especially for this one. I like a wave D to be in. On the 15-minute time frame, I wrote this down before actually recording because now some invalidations have already been hit, but the probabilities were higher for price to move towards the upside as written over here, where the reason is that for an impulse to the downside in the wave 1, 2, 3, 4, and the wave 5, the 886 was touched, rare for wave 2, common for a B or a wave X. And also as explained, if we look for a bigger WXY double zigzag, wave X hit the 0.7, significantly reducing double zigzag probabilities. And in the second bearish scenario I've spoken about as well, and then a wave A, B, and then this being a 5 wave C to the downside, wave 2 over here hit the 886 taken from this high to the low, reducing the probabilities. This is a 2, increasing probabilities for this to be a wave B or a wave X. That being said, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.